Here's how I'm gonna make 6 figures this year as a day trader in 2025. And if you don't have a quality system, then here's mine for free. Most traders lose money, and I'm breaking the mold this year in 2025. I'm going nuggets. Over the past 2 years, I was a failing trader. The last year, I was a great trader. This year, I'm going to be an amazing trader, God willing. I'm going to show you the exact strategy I'm using to hit 6 figures in 12 months. This isn't hype. It isn't none of that bullshit. This is a proven strategy that's already worked for me, and I'm going to share every detail with you, collect data with you, show you some stuff, and get right. See, last year I struggled, but I did amazing. I hit a bunch of milestones, but it just wasn't the results that I wanted. I hit goals, but it wasn't the goals that I really wanted to hit. So I reestablished everything, I re-leveled everything out, and I figured out, hey, I've been doing this the wrong way every single year. See, I was more focused on the skill set, with the charts, knowing where the market was going, knowing how the market was moving. And what I failed to realize is that was important, but it was very easy to acquire. Many people could understand how to trade in 6 months, in 4 months, in a year, but they don't know how to execute the trade. And executing trades at a high level is solely mental. It's all up here. It's all the way you view things, how you view yourself, how you view the market, how you view the world, how you view yourself. You need to understand how to shift these things. And when I shifted my viewpoint on discipline, focus, time prioritization, being able to sleep and get hours, and waking up very early to do the things that I need to do, and being creative every single day. When I focus on these things, opportunity for me to grow was unveiled. See, I was not focused only on skill sets, but I forgot totally about myself. I forgot who was the vehicle. See, our skill set is the rider. We are the horse. We drive the boat. You feel me? We get right. So we need to make sure we are always at top tier, focus on what we're doing, focus on getting better so our business can always grow. So now do you believe me when I say I'm going to hit 6-7 figures this year? If you don't by now, then you need to understand that it's just character traits. If you are a disciplined person, if you do these things, if you're a high achiever, if you work your ass off and have work ethic and do what you're supposed to do at a high level, and you execute daily, you can go into any business, any realm, because the business is the person. Skill set is the vehicle that the person is using. Money is not the goal. We are the goal. God is the goal. So focus on that. Of course, you want to know why the hell you should listen to me. I'm not the perfect person, and I'm not making hundreds of thousands of dollars, but what I am doing and what I do have is a system, and I'm making money with that system, and I'm doing it consistently. Last year, I managed over $350,000 in crowd firm funding, made some payouts on that. Not gonna disclose the amount because it ain't none of your damn business, you feel me? But when I hit 7 figures, you will know how big it got. Understanding that I'm not just coming here with BS, I'm coming here to help, because when I needed help, when I was at a low point, or even when I was making a little bit of money, I couldn't see what somebody's process was. I couldn't understand what traders thought and how they thought and how they did things. What made them successful? What made them profitable? What made them consistent? Understanding that. And what makes traders consistent like me is just having discipline. Externally, when you eating, when you working out, when you going to sleep, when you waking up, when you showering, when you brushing your teeth, all these things are very important because they are a mental profit and loss statement to yourself. But I'm not, okay, it's not a mental, listen, I could go crazy, but I'm here to help y'all. I just want to be the guy that I didn't have, and I want to do that for you guys as day traders. I want to make sure everybody here becomes a professional trader with professional profits, or on their own. So whether you watch this video and you watch 100 more, or just the only one you watch and you click off, just know I'm here to help. So let's get into the charts. I'm gonna break down a few things and then we go from there. Here's the breakdown of my strategy before we get into it. I only look for setups that are A+ setups. I don't want nothing except what is on my checklist. I break it down. Now, I might not get all 6-7 things on that checklist, but I have a hierarchy of things, and one of those is time, liquidity, displacement. If I don't got those 3 things, I ain't interested. If we don't got a trending market, a clear direction, I'm not interested. Then we go to supply and demand and all these things like that, the 1 hour time frame, and entering and exiting, all these things like that. But I have a clear plan. So make sure the first thing you do is have a clear plan. If you don't have one now, you will by the end of this video. So stay tuned. Let's get to it. Here's the second thing. Risk management is king. Nobody wins without managing risk. You will blow every single account you have. Manage risk, stick to the process, understand what you risk per trade, what you want to earn per trade. Me, I'm not fixed at 1 or 2 or 1 or 3 because I don't know if the market is willing to give me that 1 or 2 when I enter the market. So what I do is utilize risk management with discretion, and I just attack my trades. I just take them. You feel me? I get in where I fit in, I stick to my plan, and I execute. And the most important thing about risk management is surviving is protecting your downside. You always want to understand what the downside is. Always want to accept the risk mentally, but also understand like, yo, that number is real and you need to risk money, and you need to be not fearful, but you need to be conscious. You need to be very, what's the word? You need to be very like aggressive, but also very cautious. A little bit of a mixture of both, and go from there. And the next thing is always have discipline over emotions. Yes, our emotions are real. So one thing people are saying, trade without emotion. God here. Shit don't work. That's not how we work. We are human beings. We are emotional human beings, mind you. Fear being the number one emotion. Understand that when discipline is there, you have a system. You have a risk management strategy. You have something that you would want to, you know is going to happen. You're looking for it. You wait for it. When it happens, you execute. You don't get fearful. You put the right number on there, and then you let things play out the way it is. And when you're happy with your profits, you take them. You don't trip. You take them. You feel me? So that's really, just be disciplined. And don't only be disciplined when it comes to trading, be disciplined in your life as well. If you say you was gonna read that book, you better make sure you read it. If you say you was gonna eat healthy, you better make sure you're doing it. If you say you was gonna work out, get on the damn floor and work out. You know what I'm saying? If you say you was gonna tell your mom you love her, call your mom right now. Post the video. Feel me? These are discipline. You give yourself confidence. Your self-worth is through work. Your self-worth is through what you say to yourself, your words. So stick to it. Let's get to the charts. So what we are gonna do here is literally, I call it collecting data. It might be a little boring, but it's not, because I'm funny as shit. We're gonna just go back in time, and we're gonna look for our strategy on a couple of different time frames. We're gonna start with the daily because it's easy. So when we on the daily, we wanna look for our strategy. Let's keep it simple. So boom, we got an idea right here. Cool. It might be a little different on the daily, but it works. So again, right here on the daily, this is just me showing you it works. So again, I look for sweep of liquidity, of course. The one thing I can't factor in here is time, because it's on the daily, but it plays out. Then we get a nice level of supply right here that we tapped into. What do we get? A nice sweep of this high, and then we get displacement to the downside beautifully. Feel me? So one or two things can happen. We can come back to this level right here and take a sell, which we may do in the future, or we can respect the supply demand flip because it's the strength. So we could just say, hey, like support resistance flip, whatever you want to consider it. I don't trade that. I just focus on, hey, most of the time I draw a line and say, hey, this is what I want to see tagged. Now, the only thing before we see that tag for me to take this trade is I need to see a sweep of liquidity. So for example, we get a push down to the downside, we get another push to the downside. What I would do is take this trade right here. And the reason I would take this trade is because, let's say I took it at these highs, I would probably put my stop above this level here, or maybe even above, like, I mean, that pip is crazy on the day, so I don't trade the daily, but people who swing, if I swung, my strategy would work because I use the daily to start my strategy. I would put my stops up here, and then I would just target what? What are we looking to target? If you've been in my channel, you know we're looking to target liquidity. We have what? Relative equal lows right here, and we also have some sort of trend line liquidity, and we could go from there. We also have what? This low here that gave us our entry is pretty much relatively equal to this low here. So we could just call those the relative equal lows to target, and then this is the weak low to target. We get in our trade, simple target, 1 to 2.47. It happened in 1, 2, well, I say 1, 2, 3, 4 days. Boom, you're done. You ain't even gotta look at the charts. Cool. Let's go over another example. Again, real raw, authentic, let's just see. Now again, this level that we liked before, right? What did it do? Looking for the same exact thing. Y'all gonna get it. This is only the second one. What? It swept these highs, I believe, slightly. Let's see what it did. Oh, it respected. It respected. We can say it swept this level. It's stuck, or it respected this level, but it swept this level. I like it. What I would do, map out this block right here. Cool, because that's a beautiful block. Up candle, down candle, that's some liquidity. Another thing we have right here beautifully is inducement. Now, would I trade off of this? Not from down here after this candlestick, because we have this high. This is the high and the low, truly. And really, this is the high and the low. But we just haven't gotten there yet. But this is in a premium, I'm pretty sure, because if we took our high to low right here, you see we had the 6.18 level. Those are premium levels in the market. We like it. And all we want to do is get here and see price, show some rejection. We get this nice rejection candle. We get a down candle. What I would essentially do, so I don't have a crazy big stop loss, is If I was on a daily, and I could say this in hindsight, it's easy to say in hindsight, I don't know what I would do. But I'm telling you what I do on my strategy. I would like the lows of this candle to be taken, something like that, details, and then you can keep your stop up here. Who cares? You feel me? You on the daily anyway. You just want to get in where you fit in, and then again, target the liquidity. What is the liquidity in this case? It's here because this is a weak low. Why is it a weak low? Because this is the true high right here, or this one. And then this low's job is to take out that high. And if it can't do that, it's very weak. Now, one thing you keep in mind is that it did take out this high. So in the fact that it did take out this high, we could just target, hey, you could just target the wicks. But me, I'm gonna target the low and try to make sure we get to the low. Next example. Let's just keep going along. Let's keep going along. So boom, my next level to look at for supply will be right here, down to this imbalance right here. As you can see, I'm drawing them out. And you could just pull it to this block right here, this up candle, chop, 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 expansion, cool. So once we get to that level, I will like it. Until then, we can look, see what market is presenting. What I do like the market is presenting here is that we got what? We got a high taken, right? And this, to me, is an important high. Unlike this high, it could have been an important high, but we had all this above it. In this case, we have all this above this. This is not necessarily not an important high, but what it is from this high to this low, we not getting deep into that premium, right? We not deep into that. So potentially, once we take that high, we can say, hey, where did we get did we get a sweep? Well, we took these lows, we took a high. Where is our demand levels at? We got this one here kind of, giving a mitigation, and then we have this one here giving a mitigation. So essentially what I would do is more than likely take a trade immediately once we get back to this area of interest. You see this high right here. Let's just draw this box right on it. This high was the push from this candle, then we flew up there. So I'll take this entry right here, put my stops down here. Boom. Candle, protect that candle, and all we want to target is not be greedy. We want to target, boom, you see this candle right here? Keep it simple. You can target the box, or you can target this. Want to 2.7 or risk the extra 25, 0.25 on the trade, and we actually get the trade. Now, one thing we could end up doing is say, hey, where could we have taken the loss here on the sell side? Potentially, I would like this level, understanding, hey, we got this extreme level up here, but I would still like this level. Now, the only difference is because we got mitigation, we come back here, I'm not just gonna take a risk entry, you feel me? The only reason I wouldn't take a risk entry here is because now that I see buyers like kind of showing some structure and moving, because not only, it didn't just take a high, come to a level, it took a high, came back, tried to test the high, came back, tried to sell off, sorry guys, tried to test the high, came back, tried to sell off here, test the high, took a high again, consolidated, got here, started consolidating. I'm not just gonna take a sell. Like this one got here and started consolidating. Well, it was the first time we actually tapped into this block. We tapped into this block, boom. You could take a sell here if you wanted to, cool, and say, hey, I like this level, I'm willing to take the risk. You will end up taking a quick L. So what? What happens is price comes up here and we tap into a fair value gap. I don't trade fair value gaps, but what I do trade is liquidity concepts. So one thing we can do is when we have a trending market, we can see if we can find an entry. And this is the last example I'll show on the daily. And let's see, price didn't quite come to this level, but I would have loved to trade from here. So let's X that. We'll miss that trade, nothing here. Then we get down here, nothing here. I mean, we never really took a low, swept liquidity. So that's pretty much it. I just go over the charts and I look at what I could have done and what I would potentially do. I don't give a damn about the outcome, and I don't care if I'm not back testing or not. I know when I'm in the markets, I'm going crazy and I'm looking at what I see. So let's see here. We have some consolidation here, boom, boom, boom. So the reason none of this would interest me is because one thing, we had this high and this low. Everything internally is consolidation. None of these things are doing what? Taking out this low or taking out a low and then like boom, taking a high. Now this one kind of did take out a high, we come back, take out a high, but right now what it's doing to me is just showing like kind of a stack to drop kind of situation. So I would be patient, wait for a drop or some sort. We actually get a drop, but I wouldn't even enter there. I would wait. Now, the distance between this, we test this low, truly test it. So now I can say, potentially this is a level that's gonna hold. We're not gonna go below this 4,000 level, 400 level. So once we break this, we come up here, we break this high. One thing that I like is we actually swept liquidity right here. Where is it? Yeah, right here. So we sweep lows here. What I would essentially do is say, hey, I mean, we tapped into this block right here. This level could still be valid. And then we also got this wick here. Now, I don't just trade the wicks, but what I would want to see is because we already took this high up here, I would want to see a reaction. Now, I probably would have took a loss here, more than likely, because I would have took that to target maybe the highs or maybe this right here. But what actually happened is price gave a reaction, consolidated. Once I seen that consolidation, more than likely I would have got out because I do day trade, and this is late in the day. But that could be a potential loss if I took it on a personal. Now, the levels that I would look at next still for buys, because again, we took out the highs, right? We had this, and then we made this, right? Cool, complex structure, very simple. What is wrong with me, bro? Why am I itching like this? So we had this high to this low. We took out that high over there. So now we have our structure, and it's complex, but it's simple. We could potentially take an L there, but we don't, whatever it is. And I'll move a little quick, guys. I know it's kind of boring, but it's important. You can say, hey, this is our inducement from yesterday. Let's see if we could catch buys today. Put our entry right there. Put our stops down there. We target liquidity. Where's the most, liquidity? Well, it will be here because this is a weak high, and then it will also be midnight price liquidity as well, and you can go from there. Now, let's say suppliers were potentially going to take control, and we thought they were. For some reason, you put a box right there, you draw from the imbalance, and you just target that. Keep your target simple. You get there, you smack it, boom, and then you see you fly away. One more example is a nice one that I like because it's a little unorthodox. We get a high in the market, and then we completely take a low. So our structure goes like this, boom, right? But essentially how we looking at it is we took out this key level of demand, boom, and when we took out that level, we swept these highs, and when we took out that level, we swept these highs ever so slightly right here. And this is something I'll take, but man, I'll go low risk. And then once we do that, we push down. Now, the reason I like this is because it's displacement. Now, the problem is we have this right here and we have this above. So I would keep that in mind. So what I would probably do is take this level here, not that tight though. What I would do is extend it up a little bit to this, let's see, up here. When price gets here, I would just look to see if we're gonna reject or something. Instead of just taking this risk entry and having simple, like, I mean, that's not a bad stop for me, but it is a lot. Instead of just having something like that, what I would do is wait for time to align. So we would come here, 9, 10, okay, 1 o'clock. I guess it was probably news or something like that. You can say, listen, we rejected off of here. Even after this candle, I would have probably entered and put my stops at this imbalance right here at the bottom of this candle, something like that. I would figure it out in the moment, use my discretion based on my experience, and just go from there. And then as far as targeting liquidity, I would just target this demand zone that we tapped into. So we could just drag that over very simply. That was the last level. You got 2 equal lows down here, right here. Relatively equal lows, target those, you get a nice trade. You wouldn't probably expect that, I wouldn't, and you go from there. But listen, here's the thing, success in trading is not flashy. It's not about hitting these crazy trades. It's not about being in the perfect position and getting this and having a 1 to 10 and a 1 to whatever. It's not about those things. It's about discipline, it's about consistency. It's about a system and a plan and executing and stick to it. Build the character traits that will allow you to do those things. When you build those character traits, no matter what happens, no matter what you do, you will always value your system. You'll always stick to the plan because that's just who you are as a part of your identity. When I talk about these character traits, think of it like this. If you're somebody that's fat, lazy, you don't want to do too much, you don't believe in yourself, then success won't come to you. But if you're somebody who's disciplined, you're an overachiever, you have a work ethic, you stick to your plan, you build systems out, you do what you know you're supposed to do on a daily basis, then success will come to you. See, success is not something that you chase. Like a butterfly. When you chase a butterfly, what does it do? It runs away from you. Success is the same exact thing. If you chase success, it will elude you. So understand that you don't chase it, you attract it. And the way you attract it is through specific character traits, specific success habits that you must enforce within yourself and conquer yourself in order to achieve self-mastery and become a profitable day trader. That's what I'm here to do for you. So I appreciate y'all. I hope this helped. And love y'all, man.